What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is April 12th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to spend some time to dive into two key things when it comes to crypto markets. First off, we're going to be talking about the continued correction in Bitcoin as we pulled back another 6% here over the last 24 hours in price, testing $40,000. But on top of that as well, I want to spend some time to dive into a really important on-chain metric, and that has to do with how many people are in unrealized profit or loss when it comes to Bitcoin and cryptocurrencies, and why it may signal that all the while we've had another 18-20% correction over these past 2 weeks, why it might not be a signal to sell everything and panic for a 30K or 20K Bitcoin price, as some people are calling for. We've got lots of things to dive into, guys. Let's go ahead and kick things off here. Now, I want to start by, again, just analyzing the current trend here over the past 2 weeks as we've been going into the start of April here, since the peak here, or relative peak for that matter, in late March, around $48,000. We've seen Bitcoin pull back nearly about $10,000 down here towards around $39,000 in price, setting in yet another higher significant low here from this ascending channel we've been having since the start of this year. Now, I really want to go ahead and emphasize here that all the while we've gone through another 18% correction, we've already done something like this back in February, and yet again continued the trend that matters most of higher lows and higher highs. I'm going to come back to that in a moment. But again, just to really put things in perspective, all the while, of course, no correction is fun here. We've seen Bitcoin pull back about 18.7%, and to put things in real perspective here, previously, we had a 20% correction in Bitcoin's price, and from the previous significant high all the way down to the low here, we saw a 26% correction. Now, what is this telling us here about market price? We've got higher highs each and every time, new relative highs here in the short term for Bitcoin as it recently charted up towards $48,000 versus the previous highs. You've got higher lows over time. All the while, you've got these sharp short-term corrections. It's signaling strength. We're seeing higher lows and higher highs. Yes, we're not going absolutely parabolic, but it's a sign that the consolidation is happening here. Institutions, larger players are not waiting around for those lower prices. They're buying it at premiums. The way to think about this, guys, is like, buying a good or service here. Or to think about, for example, like in the economy, we've been seeing inflation, right? People buying in at higher levels in this case. They're not waiting for a discount or for it to roll over here, even after these pretty sharp corrections in price. We've seen this many times here since the start of the year, and it's very common to see these kind of things during consolidation periods. We had this happen multiple times here, multiple retests of continuous lows here. And worse off, last time around, we were having generally lower highs and generally similar lows here. Usually a bearish trend here, but even during that we saw a rip higher in prices. And now we've got the bullish pattern here of higher lows and higher highs, showcasing here that when we clear through this resistance, market prices will likely not only come up, make support on this previous resistance, but really start to pop off, similar to what we've seen in the past when we get towards the price discovery within this range. Now, all the while, you guys may agree or disagree on this analysis here with this current status of where the market is. Whether or not you agree or disagree, I want to go ahead and propose and talk about one really important metric on chain. And that has to do with understanding where addresses on chain are in profit, or whether in this case they're in profit or in lost territory. Because I think this helps us to get a really good picture here as to understanding whether or not the market is ready to just panic sell and really drag prices down to 30, 20K. A lot of people I think feel right now, depending on when they've gotten into the market, people usually tend to think from their own perspective. And I'll be honest, as someone who's been in crypto for a long time, I can honestly have that same bias. Everyone does to some degree. We're all thinking through our view of the world, our own tunnel vision. But what I think really helps to clear that out and get a better picture for the broad scheme of things is to take a look at where the market actually stands when it comes to on-chain metrics. Because the on-chain metrics, all the while, they're absolutely not 100% accurate. They don't lie. And they give us a really clear perspective of the general trend of whether or not people are in profit or in lost territory. Let's go ahead and take a look at it here. So as we dive in here to this article, this really interesting article from Cointelegraph referencing this data set from Glassnode. I actually just noticed they featured the animated short they did over here. If you guys haven't seen that, definitely check that out. It was really cool art animation that they did. But on the main substance here that I want to focus on, they focused on some metrics from Glassnode here. Jesse wrote here in this case on Cointelegraph about how the vast majority of addresses here are still in profit on chain. And I basically want to bring your attention here to this chart because all the while there's some really interesting data pieces here. This is really the main one that I want to bring to your attention here. This focuses on the supply, the entities, and addresses in profit, basically analyzing on-chain metrics to see whether or not the general amount of the market, whether it be the actual Bitcoin themselves through the unspent transaction outputs, like when were they last moved on chain, and the addresses in this case, how many of them in this case are at a point where when they were last moved, Bitcoin's price was lower than where it is now, i.e. you're in profit, right? How much of the market or the amount of Bitcoin or the amount of market participants on chain by addresses had moved their Bitcoin at a lower price than where they are now. And we understand very clearly, and I think you guys are probably thinking the same, that it is not an absolute end-all be-all that all those Bitcoiners or those held Bitcoin are absolutely in profit. But the important thing to understand here, guys, is that when you're talking about the weight of Bitcoin in the market, the actual supply of Bitcoin in the market, held by investors, whether they be long-term or short-term, or it has to do here in this case with the amount of market participants, generally speaking, it's important to know here that this metric is going to showcase the broader trends here when the vast majority of the market is in profit or in lost territory. And I think that this is probably one of the most interesting macro charts long term because it showcases here that the entities in profit, the addresses in profit, and the percentage supply in profit. We can see that there's a very similar trend here, that buyers over time are coming in the market and driving up Bitcoin's price so that less and less of the market is in per se lost territory, or i.e. more of them are in profit. So let's go ahead and take a look at this here. We've got most of the time here when we get up towards new all-time highs, of course, getting up towards that 100% range where everyone is at all-time highs and therefore everyone is in profit. It's hard to beat, hard to lose in that case when we're at all-time highs. You can see here though, in here during the 2015 bear market, when Bitcoin was around $200, we can see that 30 to 42% of the market, basically a third of the market, roughly speaking, was in profit. So the vast majority of the market there was actually at a loss on their positions, at least since they were last moved. We can see here in the 2018 bear market, when Bitcoin was at $3,100, 45 to 50%, nearly half the market was in profit, whereas on the other end, half the market was at a loss from the position that they had last moved their Bitcoin. We can see here during the mid-cycle correction, March of 2020, right? We can see here that we saw about 51 to 56%. But now here, in 2021 to 2022, we're at around 70 to 75%. Only a third of the market is really at a loss here, at least when we're analyzing all these key three metrics. The addresses on chain, the supply of Bitcoin. Most of the market is still in the green, and we're not seeing any significant decline in this metric. Anything that would signal people, as I think most people interpret, to get at a point where, oh my gosh, I'm break even or I've lost money, it's time to cut my losses, and people are just going to start creating a domino or cascading effect of sell orders. It's just going to drag prices lower. Right now, we're not seeing that here. And I think this is, again, an important reminder here to focus back here on what price is already telling us. Why is it that every time here, I'll go ahead and turn off the volume profile so you guys can see this a bit clear. Why is it that every time we come towards this range here, buyers are coming in? If we're seeing this kind of hectic sell-off over these 1 to 2 week periods, shouldn't we just see it collapse on down, where market price would just clobber down at 30K or 20K as all the bears have been calling for? Why haven't we seen it yet? Why didn't we see it during, one of the biggest geopolitical conflicts or wars that we've seen in the past decades in the Western world? Why haven't we seen it with record rates of inflation? Well, It's probably because there are buyers in the market, whether we like it or not, who want to buy Bitcoin at a higher premium than a couple weeks before. And that's happened time and time and time again. So if that's happening continuously, and on top of that, the buyers are driving up prices higher than where they did before, that should be a sign for us here that something explosive is around the corner. Market prices are not going to hang down here for much longer. And if you can get it while it's good. Put it that way. I can't tell you guys to go out there and buy it if you want. But to be honest with you all, if I've got additional capital on standby, I would want to go out and buy cryptos right now. Just personally speaking. Right? And I think that it's just a matter of us seeing again this kind of supply contraction we talked about in the previous video here, where prices would start to drive up, we get above that resistance, we get enough market buy orders to get past this general sell side range, right, to change off that trend here and start to break out higher and set in those higher lows and higher highs, making support on previous resistance. Now, one thing I do want to emphasize here, guys, is that if you're more of kind of a long-term investor and you're focused on kind of stacking positions long-term, and along with that, you hate having to deal with all the tax obligations, whether it be income taxes or capital gains taxes for that matter, even if you're an active trader or passive investor, I highly recommend you guys check out our sponsor for today's video, which is iTrust Capital. iTrust Capital is a cryptocurrency platform that allows you to open up a crypto IRA that allows you to passively invest and defer any tax obligations when it comes to investing in crypto assets. Now, one big thing that I emphasize is not only the general customer support that the platform offers, having over 2,000 five-star reviews on Trustpilot, but on top of that as well, it's not just a crypto IRA. They also offer the ability to allow for physical gold and silver digital ownership. So you can actually not only get exposure to Bitcoin and Ethereum and other major crypto assets, but you can also get exposure to the major commodities out there. In these times of hedging against inflation, it's more important now than ever. We actually just saw today record inflation numbers of the past few decades. Over more than 50 years, we're up to 8.5% annual inflation, exactly as we talked about in the previous video a couple of days ago when we were back doing our recording on the beach. So if you guys haven't checked out iTrust Capital, definitely check it out down below in the description. Great way to support the channel and a great way to invest long term. If you aren't maximizing your IRA contributions, you might be missing out. Now, one thing I want to, again, build on here, and I know I might be beating a dead horse at this point, but I want to signal here, again, on my point here about how buyers are coming in at a similar age of Bitcoin. It's not just bullish price action in the sense of Bitcoin when we're taking a look at the longer term trend. We take a look at Ethereum here. This is where things get really interesting. So you guys know we've been talking about this support range here, where we had previous resistance or kind of sideways price action here, and we wanted to turn this into support. Well, all the while, Bitcoin may have not held on its potential new support range. Take a look here at Ethereum against Bitcoin. Ethereum came down here, went from around 0.076 BTC per ETH down to 0.073. Right? A nice solid pullback here. And yet again, just like over here on April 6th, buyers coming in, sweeping up the ratio higher here, signaling that they're ready to take on more risk. They're not getting fearful here. And this trend has been continuing since back here in May of 2021. This is where, again, as we talked about yesterday when we read Arthur Hayes' article on his theory that we're going to see Bitcoin at 30,000 and Ethereum coming down to 2,500. I just generally don't see how this could happen. The market price just isn't showing this, guys. All the signs are around us here that the market is ready to drive prices higher. And if you get caught up in the chop, the 10 to 20% corrections, thinking that it's going to turn to 30, 40, 50% correction, more times than not, it's not to say that it can't happen. I'm not going to be some monolithic opinion and say, absolutely, this can't happen, right? Never say never in crypto. But I will say that more times than not, and I will put my money where my mouth is, I'm putting my name by it in this case, and I'm putting my actions to it, that I do not believe there is any genuine chance that we are going to see a collapse, especially to 20K, but very unlikely to see a pullback to 30K. And I'll admit that I'm wrong if it happens. As you all know, we talk about when we get things right here on the channel. I made some terrible calls in the past, over the past 5 years in the channel, learned a lot from those mistakes, and I try to make sure that the calls I make here on the channel, if I do make any, are based off the lessons I've learned in the past. the worst thing you can do is get caught up in the chop. And that's something I've learned not only in crypto markets, I've learned that in equity markets, I've learned that in foreign exchange or Forex markets, I've learned it in commodity markets. The market loves to shake you out. And right when you least expect it, buyers are going to come driving the price higher. And I'll go ahead and just kind of point this out here. I think a good way to view this, guys, is like really thinking again back through history here and just analyzing the chart here. I bet many of you probably thought the exact same thing. You know, the idea here that Bitcoin's price was going to collapse here, just like we're talking about here today, right? This idea that Bitcoin might possibly collapse through, go down to 30K, right? You probably thought the same thing here, or maybe over here, or maybe even over here. But none of those times we saw Bitcoin's price do that. Now, if you can excuse my childish drawings on the chart, you might very well get what I'm saying here, which is that it's very easy to panic and think of the worst case scenario when we get to an area of historic support. But ironically enough, that's when buyers come in. And we're already seeing that right now. Now, it could change, but I gotta be honest with you all, I'm betting my cards that it won't. So we've been pretty accurate so far over the past few months. We called for the continuation of the correction in December. Previously, we called for Bitcoin not to hit 100K in 2021. We called for Bitcoin to revisit down to that $30,000 range previously, which the 30 to 35K range, and we did that and went to 33,000. And now we're set on the idea that we're going into a spring rally. Let's see how it plays out. I know where I'm exposed. I'm interested to see what you guys do as well. That's it for today's video, everyone. If you like the video or my long drawn out pauses, I know I should probably have taken theater classes. I'm just kidding. But if you guys enjoyed the video, consider dropping a like, consider subscribing, and I hope more than anything, this video has proven valuable for you. Whether you agree or disagree, I think it's important to get various different opinions, like we covered Arthur Hayes' article the other day. But that's it for today's video, everyone. Thank you all so much for watching, and I'll see you all in the next video. Take care, everyone.